Friday, August 4th, 2017, Monaco 64, home of alternative economics and contrarian views. So it's just gone past 1:30 p.m. London time or 8:30 a.m. Eastern time in the US. We've just had non-farm payroll. The number was better than expected. Let's have a look here. It came out at non-farm payroll, came out at 209,000, was expected 183,000, and the previous number was revised up from around 220 to 231. Unemployment rate, as expected, 4.3%. That's the unemployment rate where they don't count, though, 95 million people that have given up looking for a job or don't want to work. What else? Average hourly earnings was up 0.3. That's as expected. And the previous was 0.2. Average weekly hours worked, 34.5, just as expected. Manufacturing payrolls was actually up 16,000, was expected only 5,000. There were some fears that it could be a lower number than expected because of the auto industry being kind of in trouble. As for the markets, well, just a minute or so before the numbers, gold was at 1268, silver was at 1674, and right now, at 2 minutes afterwards, gold is 1262. The low has been 1260. Silver has dropped back to 1657. The Dow was up 50 points prior to the number, and right now it's up 60 at 22,085. S&P up 5 at 2477. Currencies. This is a little more interesting here. The currencies. The pound was at 131.41 before the number. We're now at 130.95. So that's dropped significantly, is down 1/3% now. The euro is at 118.66 before the number. Right now is at 118.27, so it's dropped back about 1/3% as well. The dollar's rallied strongly against the yen as well. We were at 110.12 before the number. We're now at 110.66. So the main, move right after the number has been a lot stronger dollar, weaker gold and precious metals prices. Fairly subdued stock market, still fairly strong. In terms of interest rates, let's have a look here. The 2-year note was at 134 yield before the number, is now 136. The 10-year yield, the 10-year note yield was at 223. We are now at 225. So we still got, just almost an hour to go till the open of the New York Stock Exchange, kind of the official open of the markets in the U.S. So we still got a long day ahead. But from these moves, it looks like it could be a day of dollar strength, weakness in precious metals, strong stock market. I guess the stock market right now, the Dow especially, goes up no matter what happens. We're now up 74 at 22,100. Looking at the Dow chart, ever since we've broken the high from March in the beginning of June, the Dow has been on almost a one-way street higher. We had some kind of correction earlier, in July or so. But ever since the 14th or 24th of July, we've had kind of 10 straight days higher. And if we keep this trend that we've had in the last 10 days or so, if we keep this trend until like the end of October, the Dow could be at 26,000 in a jiffy. So that's what's happening there. The other interesting topics I'm seeing is about the savings ratio, which is basically savings is disposable income minus consumption. So when you get the savings that is left over divided by disposable income, you get the ratio. There's been an article by Albert Edwards, who's quite a contrarian economist, even though he works for a big international bank here in London, Société Générale, a French bank, or Soc Gen. And he's written, I think it was yesterday or the day before, how the savings ratio in the US and the UK have plummeted. The UK is even worse. We're now at 1.9%, the savings ratio, and that's the lowest since they've been keeping records since 1963. Usually during a recession, the savings ratio rises because people are not as certain about the future, so they don't spend as much, they save more, they're concerned. But right now, the savings ratio is just at levels even lower, according to him. And he can also, looking at the charts that I have, they're at levels where just prior to, where we were in 2007, 2008, before that big crisis. And the problem for the Bank of England, especially right now, is that they have no room to accommodate monetary policy anymore. If there is a recession. So you could have the mother of all recessions, especially in the UK. The other thing it's a sign of, the low savings ratio. Not only it's because rates are at zero and it doesn't pay to save, but also because of the rising cost of living, the consequence of all the inflation we've had over the last 10 years in the UK. And by inflation, I mean a creation of money, fiat money through debt. That's starting to spill over into consumer prices. That's weakening the currency as well. The pound is not going down because of Brexit. That's what Mark Carney, the governor of the Bank of England, said yesterday. He's just using that as a scapegoat. The reason the pound is going down is that we've created too many pounds. The Bank of England and the banking system, they've just created a debt bubble, and that's why we're getting a rising cost of living. Unless Gordon Brown was right, and modern economies don't have recessions anymore. I think he made a comment like that when he was chancellor in the early 2000s, that the days of boom and bust were gone. Unless he was right, which I think he wasn't, we will have a bust very sooner rather than later. I can't tell you when, but the savings ratio in the UK, 1.9%. Just to give you an example, in the last 54 years, that ratio has been 9.4%. Granted, since the early 80s, it's been going down, but still 1.9% is quite amazing. In the US, is at very low rates as well. So that's quite interesting. The talk about savings, we usually don't cover savings that much because it's something people are not doing that much. But that might change. And if people do start saving again, if things go sour, the economy starts going into a recession, there's nothing really that they'll be able to do, the powers that be. And they have, especially in the UK, the interest rate here is at 0.25 or 0.25%. So they can't really cut. And if they take it negative, it's going to make it even worse. You take it negative, you're going to draw money out of the system. I just read that Swiss banks had to pay $1 billion in interest the first 6 months out of the year to the central bank. That's $1 billion Swiss francs that they could have lent out to the real economy. So that won't help either. So I think it's still early days. There's a note saying in the markets, when I was in the markets, you got a number. The initial reaction of markets should be, a trend setter for the rest of the day. But we don't know. Maybe the dollar will fall back and precious metals will come back. Who knows? If that does happen, if the dollar does fall back, even though we've rallied here after this number, it would be a really negative sign. It would mean that no matter what comes out, the dollar is, heading lower. So, yeah, let's wait and see till the end of the day, see if this trend continues. The dollar has strengthened after these numbers, and precious metals have come off, but it's still early days. So if you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. Also, make a donation if you'd like. I've got some links in the description. I accept Bitcoin, Patreon, PayPal, Ethereum. And if you want to as well, follow me on steemit.com. And I'm also on Twitter at Maneko64. I'll talk to you later. Bye.